I actually like the fact that this bull market isn't on anybody's radar because I just assume Wall Street buy into the market later at much higher prices. They don't need to get in now. I want my clients to get in now. And the less competition, the better. I just want to get as much, gold mining stocks and silver mining stocks as I can. And the last thing I want is, Merrill Lynch and Goldman Sachs telling all their clients to buy, right? Because that's going to make it more expensive for my clients. So the longer they ignore this bull market, the better, as far as I'm concerned. Like, I'm in no hurry. I waited plenty of time for this, and I'm in no hurry to speed it up right now. But I do look at that as a positive sign that nobody's invested. The public, has no idea. You have one group of people that are still fixated on Bitcoin, and they're buying Bitcoin instead of gold. Although Bukele, I just read that he just put $50 million into gold. So maybe he's figuring out that Bitcoin is the wrong way to go. But, it's interesting that Bitcoin is barely up today, and Bitcoin is more than 15% below its peak priced in gold from 2021. So 4 years, Bitcoin's been losing value relative to gold, despite all the marketing hype surrounding Bitcoin. All the ETFs that were established, the NFTs, the Super Bowl ads, the celebrity endorsements, Donald Trump and the strategic Bitcoin reserve and the Bitcoin czar and making Bitcoin the capital of the world, right? All that pump, and they can't even get Bitcoin to go up. So what does that tell you? But what is going up is the one thing that's not getting any hype, and that's gold. And now silver, going up as well, but not into record territory. So these gold stocks, I think, are still extremely cheap. They could double again from here, and I don't think they'd be expensive, especially considering that if the gold stocks double from here, gold's going to be a lot higher. So it's like they still wouldn't have caught up to where they should be. So we got a long way to go in the mining stocks. In fact, in April of this year, I kind of aggravated some of the guys at Schiff Gold because I put out this report that said the best way to buy gold, and it was to buy the gold mining stocks. And I was telling my clients for the first time not to buy gold. And gold was around 3,200, 3,300. And I said, look, I'm a gold bull. I love gold, but these gold stocks are so cheap that it doesn't make any sense to buy gold above ground. Just buy it while it's still in the ground because it's so cheap. And while gold went sideways for all those months, the gold stocks were soaring. And they're not as cheap as they were, obviously, but they're still very cheap. And I still think people should be buying gold stocks and gold now, and physical silver.
What do you make of this significant and rapid drop in the USD versus gold? And do you think governments will eventually be forced to reintroduce gold to the monetary system in one form or another?
Well, I think that is going to happen. I think it's pretty clear. If you look at the main buyers of gold the past couple of years, it's been foreign central banks. Why are they doing that? I think they're preparing to replace their dollars with gold. I think gold is going to become the primary reserve asset for central bank. And that's going to be a game changer for the United States because the world is not going to need our dollars anymore. Well, if they don't need our dollars, then how are we going to buy all the stuff that we need? Because we don't produce it. And how are we going to finance our debt? Because we've been relying on foreigners to finance that debt because they have the savings that we lack. So it's a big problem for the U.S. But I think from a monetary perspective, you're going to see, I think, people utilizing gold using the technology that exists today, whether it's on-chain with, tokenized versions of gold, or whether it's just through proprietary closed systems where, the custodian has the gold and just uses technology to allocate ownership digitally so that people can transact business, receive and make payments, send money and receive money using gold, right? Just like using PayPal or Venmo or any other, Zelle or any of these things, you can just use gold. You don't have to transfer your gold. If I wanted to buy something from you and you wanted me to pay you, a gram of gold for it, right? Whatever that is, 30, 40 bucks, whatever, right? I don't have to send you a little bit of gold in an envelope and mail it to you. If the gold is held in a custodian and I have it tokenized in my wallet, I can just email or text you the gram. And now the ownership of the gold goes from me to you. So now you own the gold, not me anymore. You've got it. It's in a vault. Now, if you want the gold, you can have them ship it to you. But why do that? Just hold on to the ownership receipt, because now if you want to buy something, you can pay with gold, because the guy that wants to sell you that, he wants gold too. Why would people prefer gold to dollars? Because gold holds its value. Why would I want dollars when I can have gold? It's like, why use the post office when I can send something by FedEx, right? The free market has provided me with a better alternative than the government, right? Why do people use Uber and Lyft? Because taxis are too expensive. Why are taxis expensive? Because the government provides the licenses and regulates them, and so they're expensive. The free market alternative is, well, I'll just call an Uber, right? So the equivalent of an Uber in the monetary system is gold, right? Gold is the free market's money. Fiat is government money, and it's lousy because it loses its value. The longer you hold it, the less it's worth. The opposite is true of gold. The longer you hold your gold, the more it's worth. So given a choice, which would you hold?
One of the things I actually like about this bull market in gold and silver is that nobody's paying attention. Wall Street doesn't see it, the mainstream media doesn't cover it, and the average investor is still busy chasing tech stocks or meme coins. And that's fine by me, because the less competition I've got, the better. I want my clients to get in now while the gold mining stocks are still cheap, while silver is still trading at laughable levels relative to history, and while nobody at Merrill Lynch or Goldman Sachs is telling their clients to pile in. Because once that happens, it's going to be a lot more expensive. So the longer they ignore it, the happier I am. I'm in no rush to speed things up. I've been waiting for this for decades. I can wait a little longer, but you can see the pieces falling into place. And the irony here is that the same people who ignored the housing bubble are ignoring this. Remember in 2005, 2006, when I was warning that the real estate market was a ticking time bomb? Nobody wanted to hear it. CNBC laughed. They literally put me on TV so I could be the punchline. Then 2008 happened, and all of a sudden the crazy guy with the beard was right. Well, here we are again. Now people will say, "Oh, Peter, you've been bullish on gold forever." Sure, I have. But just because I've been early doesn't mean I'm wrong. If you bought gold in 2000 at $250 an ounce, you're not complaining now that it's over $3,000. If you bought silver under $5, you're not crying now that it's above $40. The people crying are the ones who listened to Wall Street tell them to stay in stocks and bonds while inflation destroyed their purchasing power. And by the way, speaking of crying, have you seen Bitcoin lately? The hype machine is still pumping. ETFs launched, Super Bowl ads ran, celebrities endorsed it, politicians embraced it. We even had Donald Trump talking about a strategic Bitcoin reserve and declaring Miami the Bitcoin capital of the world. All that noise, all that marketing, and Bitcoin is still down over 15% priced in gold since 2021. 4 years of underperformance against a lump of metal that pays no yield, has no celebrity commercials, and doesn't have a flashy ticker symbol. What does that tell you? I'll tell you what it tells me. Gold is winning the real battle. Bitcoin is a speculative asset. It trades like a tech stock. It booms when liquidity is easy, when everyone's chasing risk. But gold is money, always has been. And quietly, without the hype, it's been outperforming Bitcoin. You won't hear that on CNBC because they need the ad dollars from crypto exchanges. But the charts don't lie. Now, one of the big reasons I'm pounding the table right now is not just the metals themselves, but the mining stocks. These things are still ridiculously cheap. They've doubled off the lows, but they're still cheap. I put out a report earlier this year, aggravated some of the guys at Schiff Gold, where I told clients, don't buy gold, buy the gold miners. And people were shocked. Peter, aren't you the gold guy? Yes, I am, but I'm also a value guy. And when gold was trading around $3,200, $3,300, the miners were trading like gold was $1,500. That made no sense. So I said, don't buy the metal above ground, buy it in the ground. It's half price. And sure enough, while gold went sideways for months, the miners soared. Now they're not as cheap as they were, but they're still undervalued. Even if they double again from here, they'll still be cheap relative to gold's price. So yes, own the physical metal, especially silver, because it's going to move more dramatically. But don't ignore the miners. The upside there is massive. Let's talk about the US dollar, because what we're seeing is not just gold going up, it's currencies going down. That's the part that nobody in the mainstream wants to admit. This isn't a normal bull market. This is a monetary reset happening in real time. Look at the numbers. Foreign central banks are buying more gold than US treasuries. That's unprecedented. For decades, treasuries were the go-to reserve asset. Now they're dumping treasuries and hoarding gold. That's not an accident. That's preparation.
I think this cycle really just got started after that consolidation, but I think the leg started in 2024 when we broke above 2,000 and we quietly moved from 2,000 to 3,000 and nobody noticed it. In fact, when gold was hanging out at 2,000, a lot of analysts put sell recommendations on Newmont and Barrick because they thought that gold had topped and they didn't see any upside. And then I think when Trump won, a lot of people expected the gold to fall because the economy was going to boom and Trump was going to do all this great stuff about shrinking the deficit, making America great again. But now it's becoming more obvious that none of that was true. But I think this is a new leg. We spent really over 10 years. Remember, the first leg of the bull market was 2001 to 2011. Gold went from under 300 to 1,900. So it increased by sixfold, right? Then it really went sideways from 2011 to 2024. Gold traded between 2,000 and maybe 1,500, 1,700. I mean, it initially pulled back to 1,000. It got to 1,050 in 2015. So it held 1,000, went back up, but only made a new high briefly during the 2020 COVID crisis. It poked its head above 2,000, but then, it got chopped off and it went back down. But that's a huge base that we built around 2,000 as a floor now, because it was resistance. It was the ceiling. Now it's the support. And now we're just starting another leg, which I think will be at least symmetrical to the prior leg. So we had the move from under 300 to 1,900 consolidation. That was a sixfold increase. If you assume we go up sixfold from 2,000, that's $12,000 gold. So I kind of, at a minimum, I think that that's where we're headed. But if we end up having a dollar crisis and a U.S. sovereign debt crisis, we can go a lot higher than that. And I think that there's a good chance that that's going to happen. You asked me what's driving this. It is the monetary and fiscal policy of the United States, which are disasters. And in fact, following the weak jobs report that we got today, and by the way, the jobs market has never been this weak outside of a recession. In fact, the last two times you had a labor market as weak as the one we got right now, it was the Great Recession of 2008, 2009 with the financial crisis, or 2020 as we were shutting the whole economy down because of COVID. So, the Fed has been mischaracterizing this labor market. Powell kept saying we have a really strong labor market. We have a really strong market. He was wrong the entire time. We have a weak labor market. And you would even see how much weaker it was if we had honest statistics. But we don't. But even with the statistics we have, we had outright job decline in June. We lost 13,000 jobs in June. The August number was just plus 22,000. Manufacturing lost 13,000. And the U6 unemployment rate, which is more relevant than the headline rate of 4.3, is 8.1. So we've got rising unemployment and inflation. The Fed said that the labor market was strong, but inflation is weak. They got it backwards. The labor market is weak. Inflation is strong. And I think that's really what's helping to drive the move in gold now and down in the dollar.
And let's get into the heart of this. The reason this bull market in gold and silver is unlike any other we've had in our lifetimes is that it's not just about metals going up. It's about currencies falling apart. And when I say currencies, I don't just mean the US dollar. I mean the euro, the yen, the pound, all of them. The whole fiat system is rotten. You can see it in the numbers. The yen is at 35-year lows. The euro is basically just a weaker version of the dollar with a fancier accent. The British pound has lost 99% of its purchasing power since the creation of the Bank of England. And yet, every time gold rallies, the headlines say, gold rises on inflation fears. Gold rises because paper money falls. That's the story, but you'll never hear it on CNBC because they need to keep people parked in stocks and bonds. Now think about how absurd this is. The US government is running trillion-dollar quarterly borrowing sprees. Interest on the debt just crossed $1 trillion annually, more than we spend on defense, more than Social Security. And we're supposed to believe this is fine? Treasury officials go on TV and act like it's just another line item in the budget. If this were a household, you'd be bankrupt or in jail. If you tried to run your finances like the US Treasury, maxing out credit cards and taking out payday loans to cover the minimum payments, you wouldn't last a month. But because it's the government, they get away with it until they don't. And here's the catch. We've reached the point where interest rates can't rise without blowing up the system, and they can't fall without unleashing inflation. That's what I call the Fed's corner. Jerome Powell is boxed in tighter than a New York studio apartment. If he raises rates, the Treasury can't pay. If he cuts rates, inflation rips higher. Either way, the dollar loses. That's why gold wins. You want to know how absurd this gets? Let's take a look at some recent data. The trade deficit in July hit $103 billion, one of the worst ever. Exports down, imports up, despite tariffs. So much for tariffs fixing the trade balance. The budget deficit? Forget about it. We're looking at $2 trillion plus annually, and that's during what they call good times. Imagine what happens in a recession. The twin deficits, budget and trade, are both widening, and that's the death knell for the dollar. But what's really fascinating is how the gold miners are trading. Look at the GDX and GDXJ, the ETFs for senior and junior miners. They've exploded higher this year, up 80%, 90% year to date. That's not retail money. That's institutions finally waking up. For years, the miners underperformed because nobody believed the gold rally would stick. Investors were afraid gold would crash, so they stayed away. But now they're buying even on days when gold is down. That's a huge shift. That tells you they've realized the gold bull is real. And here's the irony. Even after doubling, the mining stocks are still cheap. If you price them relative to gold, they're trading like gold is $1,800, but gold is almost $3,500. So these stocks have a lot of catching up to do. I'll say it again, buy the miners. You're buying gold in the ground at a discount. Now let's address Bitcoin again because I know people love to bring it up. I keep hearing, Peter, you're missing the boat. Bitcoin is digital gold. No, it's not. Bitcoin is a speculative tech asset. It's been around for 15 years. Gold has been around for 5,000. Which one do you think central banks are buying? Spoiler, it's not Bitcoin. In fact, in the last 2 years, central banks bought more gold than at any time since the 1970s. Meanwhile, Bitcoin ETFs have barely attracted flows, and when they do, it's mostly retail money. I saw a tweet the other day, some Bitcoin influencer bragging that Bitcoin is up 300% since 2020, gold only 80%. Yeah, and the Argentine peso is up 500% in local terms. That doesn't mean it's winning. Price moves don't mean anything if they're not sustainable. Gold is sustainable because it's money. Bitcoin is hype. Now, I'm not saying Bitcoin goes to zero tomorrow. It could go higher in dollar terms if the dollar keeps collapsing. But in real terms, in gold terms, Bitcoin is going nowhere. It peaked relative to gold in 2021, and it's been losing ground ever since. That trend isn't changing. The real bull market is in gold. And silver, of course, is riding shotgun. Silver is the one that's going to surprise people the most. Gold gets the headlines, but silver delivers the face-ripping rallies. In 1980, silver hit $50 an ounce. Adjusted for inflation, and I don't mean the fake CPI numbers, I mean real inflation, that's hundreds of dollars an ounce today. In 2011, silver got close to $50 again, and here we are in the 40s. Once it breaks through $50, there's nothing stopping it. That resistance becomes support. I've said it before, $50 is going to be the new $30. You'll never see silver under $50 again once it breaks out. And let's not forget the industrial side. Silver isn't just money. It's used in solar panels, electronics, medical devices, and now even AI hardware. Demand is surging, supply is flat. Most silver is mined as a byproduct of other metals, so production doesn't ramp up just because demand spikes. That's a recipe for a shortage. And when you combine monetary demand with industrial demand, you've got a powder keg. You want another stat? Silver right now is about 1.1% the value of gold. Historically, in bull markets, it gets to 2%, even 3%. If gold stays at $3,500 and silver just returns to 2% of gold's value, that's $70 an ounce. At 3%, it's over $100, and that's without gold going higher. If gold goes to $5,000, which Goldman Sachs says is possible with just a 1% rotation out of treasuries, then silver at 2% is $100. At 3%, it's $150, and that's still historically normal. That's not pie in the sky. That's just reversion to the mean. But here's the part nobody gets. This is not a normal bull market cycle. This is a systemic reset. In 1944, we had Bretton Woods. In 1971, Nixon closed the gold window. Each time, it was a monetary reset. Now we're heading into another one. And when the dust settles, gold will be reintroduced into the system in some form. It might be backing for currencies. It might be settlement between central banks. It might be tokenized gold on blockchains. But it's coming. And when it does, the price has to be revalued dramatically higher to make the math work. Think about it. The US has over $35 trillion in debt. If we had to back even 10% of that with gold, at current gold holdings, you're looking at $15,000 to $20,000 an ounce to balance the books. That's not a prediction, that's just arithmetic. That's the kind of revaluation that could happen in a reset scenario. And don't think it's impossible. In 1933, FDR revalued gold from $20 to $35 an ounce overnight, a 70% devaluation of the dollar. In 1971, Nixon effectively devalued again by closing the gold window. These things happen, and when they do, they happen fast. One day you wake up and the rules are different. That's why you don't wait. You prepare now. Now let me sprinkle in a little humor, because I know this can all sound doom and gloom. Somebody asked me on Twitter the other day, "Peter, if the dollar collapses, how am I supposed to pay my Netflix subscription?" I said, "Don't worry. You won't care about Netflix when you're worried about paying for bread." That's the reality. When currencies fail, priorities shift real fast. But seriously, look at history. Every fiat currency has eventually failed. Every single one. The Roman denarius was debased into worthlessness. The French assignat collapsed. The German mark in Weimar went to zero. Even the British pound, which was once the world's reserve currency, has been destroyed by inflation over centuries. The dollar will be no different. The only question is when. And here's another angle nobody talks about: geopolitics. Countries like Russia, China, and India are openly trading in local currencies, bypassing the dollar. BRICS nations are talking about alternative settlement systems. Central banks are hoarding gold at record pace. These aren't random moves. This is a coordinated global shift away from dollar dominance. And when the world no longer needs dollars for trade, the US loses its free lunch. We can't just print money to buy goods from abroad. We'll have to actually produce things again, and given the state of our economy, that's going to be painful. So yes, I believe governments will eventually have to reintroduce gold into the monetary system. They'll have no choice. Confidence in fiat is eroding too fast, and once it's gone, it's gone. You can't just flip a switch and restore it. You need something tangible, something credible. That's gold. And when that happens, when gold becomes the backbone again, today's prices will look laughably cheap. People will look back and say, "Wait, you could buy gold at $3,500, silver at $40, mining stocks at pennies on the dollar?" And they'll wish they had acted.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.